I'm Paul Schaefer. I'm an agent with Team Minik, West USA Realty.
What's going on? What are we doing here?
I wanted to ask you questions. Before I became an agent, I had no idea how to buy a home. I didn't know the steps. I didn't know what it was. I actually remember going around with another agent and I was like, do I pay you? Like,
right,
what am I supposed to do? So this is just a Q&A session. Hopefully we'll get some views on it.
Okay.
And if we can get more questions, if any of you have questions that I didn't ask that you want to ask, he's a lender. Go ahead and tell him about yourself.
Justin Frederick. I work at Fairway Mortgage. I have a couple branches in the valley here. So been doing this for 17 years now.
Nice.
Yeah. Got into it right before the market crashed in 2008.
Right.
Yeah, it was perfect.
Yeah.
But yeah, been doing this for a while. Know what I'm doing, I think, at this point.
So far, you've done pretty good for us.
Yeah.
So I would say so.
Yeah.
Here we go. We'll just jump right into it. We're going to ask questions, and it's basically going to be you talking. What type of home loans do you offer?
Ooh,
Big
so
one, right?
we have a plethora of home loans, conventional loans, which conventional loans tend to be what everybody's really seeking eventually. FHA, VA, USDA. We have down payment assistance. We have jumbo products. We have investor products. We have bank statement loans. We have all kinds of out-of-the-box, unordinary loans too. We have loans where you can put your home in an LLC immediately. So a lot of people are searching for things like that.
Okay, let's talk about conventional. Some people don't know what it is.
Yeah.
Let's stick to the two most popular for a first-time buyer. Let's try that.
Okay, so two most popular for a first-time home buyer. I mean, obviously, if you're a veteran, we're going after the VA loan.
Yeah.
But other than that, we're looking at conventional loans and FHA loans. Those are our two most popular for first-time home buyers.
What would you need for conventional?
3% down for a conventional loan. Typically, you want to be. They say the minimum credit score is 620, but really for a conventional loan, we want to put you in at like 680 to 700 credit score, because they'll hit you harder on a monthly mortgage insurance, and they'll hit you harder on what your interest rate is.
Okay.
So that's why we tend to move anybody that's below a 680 over to an FHA product. So those products work nicely hand in hand for first-time home buyers, because if you have a great credit score, we're putting you in a conventional loan at 3% down. If your credit's a little bit on the lower end, and we can go all the way down to a 580 on an FHA. If your credit's let's just say at a 580, we can put you in an FHA with 3.5% down, and your mortgage insurance is the same as if you had an 800 credit score on FHA.
Which is crazy. But
Right. Now, the reason why we don't put the higher end credits into FHAs is because the FHA mortgage insurance is for life.
Yeah.
So we would have to refinance you out of an FHA loan in order to get rid of that mortgage insurance. Also, with an FHA loan, you have a funding fee, an upfront mortgage insurance premium, basically that's funded into the loan. You don't pay it out of pocket, but it does go back into your loan, and it's 1.75%. So we try to avoid that type of product for higher credit individuals, but it works out wonderfully for lower end credit. And traditionally, FHA has a lower interest rate as well.
Perfect.
Does that make sense?
Yeah, no, so 3% down for conventional.
3% down for conventional first-time home buyer.
First-time home buyer.
Yeah.
What if you're not a first-time home buyer?
5% down.
5% down.
Yeah.
Okay. Question is, what are your closing costs?
So closing costs differ between loan products, but so I think the standard out there that people talk about is, because if I tell them what my closing costs are, I feel like as consumers, you're just looking at that and thinking that's what you should expect. So I'm going to talk about like overall.
There you go. That's perfect.
Yeah.
Overall's good.
So I would say you need to expect somewhere around 2% on a conventional loan, whereas an FHA loan, you probably need to be looking right about 2.25%.
And this is a percentage off of the loan amount, right? So
Off of the purchase price.
Purchase price.
Yes,
so
sir.
If they're doing a $400,000 loan and putting $100,000, it's still considered off the 400, not 300.
Correct.
Perfect.
Correct.
All right. How much time do you need to complete a mortgage? So if I'm a first-time buyer, and let's just use an easy date like February 1st, I want to get a house, I'm going to start looking February 1st. When can I expect that house to be mine? Like, when can I get that mortgage?
So you're saying go under contract February 1st?
Go under contract, yeah. I've been shopping. I find the house I want. I got my pre-qual from you.
If you've already got your pre-qualification from us, we could close by February 10th. I mean, if we have the pre-qualification done and ready to go by the time you're under contract, which that's why we recommend going out and getting the pre-qualification beforehand.
I was just about to say, let's talk about pre-qual real quick. Yeah. This is another thing people don't know. If you're searching for a house and you want to know exactly what you can afford, pre-qual.
Yeah.
Right?
Well, it breaks it down. I mean, it gives you the education that you need to know to go out and shop for a home. So just because I pre-qualify you for $1 million, you may not like the payment that comes with $1 million. So, you know, a lot of people have a budget in mind on what they're looking to spend each month. And, you know, the pre-qualification may change your mind on what you're budgeting to, because let's say that you're looking for $1,000 a month on a mortgage payment. Well, you're looking at maybe a $200,000 house at that point. You may change your mind and say, hey, I'll go for that $400,000. But you need to plan on what your budget's going to be based on what our pre-qualification outcome is, right?
Know your numbers.
Know your numbers.
Know your numbers. I love it. Do you do underwriting in-house?
Oh, we do. We do. So I feel like this is such a big deal. Because that's one of the main reasons why we are able to close in such a short period of time of 10 days. I worked at Chase for 7 years, and we would have to send it out to Ohio to be underwritten, and we didn't even know who any of those people were. And you're waiting in a line, and
they'll get to you when they get to you.
They get to you when they get to you. They don't answer their phones, and it's such a big deal to be able to talk to my underwriter specifically, know, like when we're doing the pre-qualification, if there's any speed bumps that we need to get over, we're working on that right away.
I'm actually going to touch down on something real quick. As an agent working with a lender, that not being able to get a hold of them thing is so crucial. I deal with this all the time. People are, oh, he works till 5. Okay, well, I got to say something about your team that's phenomenal. 24/7. I can call.
I don't know about 24/7. Pretty darn close.
I've called pretty late before. Yeah. Okay, maybe not 24/7, but basically there's someone always answering the phone.
Yeah.
Like if I have a question, I can call the phone and it will be answered.
Yeah. 7 days a week.
7 days a week, which is amazing. We could probably call it right now. If we wanted to.
We could call it right now.
We'll do it later. If we get enough people that watch this, they're like, call it. We'll do it. We'll call it.
Yeah.
But the pre-qual, I want to go back to that actually real quick, because that's another thing that you guys are super fast at. I've had you guys issue me a pre-qual. I'm like, hey, I need a pre-qual for this client, and I've had it that day.
Yeah.
So is that something that's normally, like regularly, like tell me?
I don't think that's very normal. I mean, you know, we're all about speed of service, and I mean, I've been in the business for quite a while, so knowing what I want as a consumer, that's the way I structured my team. So that's why we're 7 days a week. That's why we answer the phone, because there's nothing more stressful if you're trying to get under contract, or you found a house that you absolutely love that you need to make an offer on, or you're in underwriting and you don't know what's happening with your file.
Or you're standing with the client that has questions.
We try to eliminate as much of the stress as we can on the buyers, because we know what can come along with one packing up your house and moving to another house, and trying to do that all within the same day. So we're trying to knock it out as fast as we can. But now on the speed of the pre-qual, it all relies on the consumer,
right?
Because we need documents from you to review to support that pre-qualification.
Actually, my next question is, what documents do I need? So I'm a buyer, I'm a first-time buyer, and I'm like, man, I want to go look at houses, I want to get my pre-qual. What do they need to get you to get this paper, this pre-qual?
So it's everybody's different, right? I mean, you do photos and you do real estate, but there's other people that do real estate and they have a W-2 job too. But let's just say that you work for a company as a W-2 employee. I'm gonna need 2 years W-2s, 30 days worth of pay stubs. So if you're paid every 2 weeks, I need 3 pay stubs, okay?
If you're paid weekly, it's 5?
Yeah.
Okay.
Yeah, because I need 30 days minimum.
So
right?
2 paid monthly would be 2 then?
Yep. I need bank statements. I need driver's license. that will get me going in the right direction. Now, there's caveats to it. So let's say you're a W-2 employee, but you're a truck driver and you get paid per mile. Well, then I have to dig deeper and I have to get verifications of employment because it's called piecework. So it's not guaranteed that they're going to be doing a certain amount of hours per week. Okay. Let's say you're a server and you make tips. I got to get a verification of employment because I got to do a history of tips. Okay. Now, let's say you're commissioned or you're bonused. There is a way for me to get around getting a verification of employment, but I'd have to have your year-end pay stub from the last 2 years. So I can average that commission based on the pay stub because it will tell me your year-to-date on earnings for commissions. Okay. So there's little caveats to it, but pretty simple when it really comes down to it. There's not very many people that have that type of income. And if you do have that type of income, please start sooner than later. If you're looking at buying in June, there's no reason why I wouldn't start now. Because we can do what's called soft pulls on credit.
That was my next question, the dreaded credit pull. Getting your social security number, doing the credit check, the dreaded credit check. So let's go into that.
Yeah, and a lot of people look at it negatively, but you got to keep in mind that your credit report is there to serve as a tool for credit worthiness. We have to look at that. We have to run it through our systems. But we have the ability over at my office to run a soft pull rather than a hard inquiry on your credit report, which will break down pretty much everything the same. And it will allow us to calculate your debt to income ratio. It will even allow us to run it through an automated underwriting system to get a pre-qualification or a pre-approval on your home loan. So it serves as a tool that we need in order to move forward. If we don't have your credit report, one, we don't have all your liabilities in front of us. We don't have your credit score, so it's all hypothetical and it's not going to give us what we need, and we're not going to feel comfortable giving you a pre-qualification without that report.
Which honestly, if you're serious about buying a house, like
you need to do it.
You need to do it. Like if this is something you're really going to pursue, another question would be, how long is the pre-qual good for? So if you want to buy a house in July, here we are in January, so these real dates. Should they do it now?
I would say yes, and the reason why I say that is because let's say that there's something on your report that and this happens a lot, like a medical collection or something that you had no idea, but if you were to pay it off and get it deleted, then your score can go up 30, 40 points. And so that's a big difference on what your interest rate is and your credit rating. It's a big difference on what your mortgage insurance. Maybe we're putting you in an FHA loan because of that. So you'd have more finance. So that's why we always say jump ahead. And you know what's funny is a lot of times people have a goal of in the summer, but we get them pre-qualified and they just start cruising on MLS and they look at and then they find the one that they absolutely love. And before you know it, they're buying a house in February and their plans completely change because they found the deal. Yeah. You know, if you're confining your time limit to 30 days of finding a house, you may not have the ability to find exactly what you want in that period of time. Whereas if you give yourself a 7-month window of, hey, I'm already pre-qualified, might as well look.
Exactly. Yes.
You're looking, and then you might come across an amazing deal, the exact house you want in the exact neighborhood.
Well, and you honestly never know what's going to happen in the world.
Yeah.
So why not be ready to go? If you know purchasing is going to be something you're going to do, like I'm going to buy a house by July. You know, saying that buy is so much more different than in. Yeah. You know, and having your prequel, being ready to go, knowing which loan you are, which is again why we're doing this video. Like as much information as we can get out to you guys.
So when I just want to touch more base on the prequal. So if you have the pre-qualification issued and you're searching on MLS for homes, all you got to do is text us the address of the property that you're looking at, and we'll price it out for you. We'll send you back what the payment is, what you need for down payment and closing costs. You'll have everything right there because you've already filled out the pre-qual. Yeah, you've already done all the legwork.
I love it.
It's a big difference.
No, it is, and that's I like to reiterate that to my clients when I meet them. I'm like, if this is something we know we're going to do, let's be ready. Let's have all of our ducks in a row, because then we can just go look at the house versus like, oh, we got to go. Did you get him that W-2? He didn't know. we don't even know if we can get this house.
Right,
You know, like
right.
let's know if we can get it before we
Right.
go get excited about it.
Right.
So I like that. Another question: do you participate in any down payment assistance programs? Which I know you do.
Yeah.
How do you stay up to date with what's going on, and how do you make sure you know like the best programs that are out there at all times?
Yeah. So we have a product desk within my company, and they'll send us any updates on down payment assistance. Yeah, we participate in all the programs. Unfortunately, a lot of the programs aren't running at full speed right now, just because of where rates are. But as premium pricing starts coming back, you may start to see more down payment assistance programs come back into play and really work out well for people.
Good. You talked on rates, and I want to hit that real quick.
Okay.
Because this is my favorite thing. It's not my favorite, obviously, the worst thing I hear. The interest rates are too high. I can't buy right now. Okay. I saw a meme that was really funny. It said I think it was, I don't know the exact date, so don't quote me on this exact, but this is the gist of it. 1971 rates were 7.25% or whatever. Had you waited, if you were in 1971, you're like, I'm just going to wait for the rates to drop.
Yeah, when
you
was the date?
Waited till 1994 to buy a house. How, you know what I mean? Like, and something you guys offer that I would love to hear about too is free refi.
Yeah, it's buy now, refinance later. So you can buy now with the standard closing costs, and maybe have a seller pay for a portion of your closing costs at this point.
Sessions.
But and it's available right now because the demand's not really crazy right now on homes. But you can refinance before the end of 2025 without any lender or appraisal fees. So it's a big deal. I wish more people would take advantage of it. So what I want to say about rates is, what's the worst that's going to happen? Either your rate drops before you purchase the home, and we'll drop you into the lower rate before we close, or you have to refi. So I always like to say, date the rate, marry the home.
I was waiting for it. I was like,
I say this all the time. I say it all the time, but it's true. Well, the value of the home is going to continue to go up. We've seen it in this market.
Right. Well, and you've seen it over any analytical graph of real estate for the past, 50, 100 years. Like, what does it do? It continues to go. Even when it crashes, or everybody likes pointing at 2008. Where did it go from 08 to now? It went up. It went up dramatically, actually.
And I want to say that people in 2007 said, or in 2008, the prices will never be that again. And we far exceeded those prices in 2008.
Yeah.
All over the place. And the housing market crashed in 2008 because of no regulation.
Yes.
And there's heavy regulation on lending, appraisers. That's all fixed.
Yeah, that's exactly. I try to reiterate that to people. That's if that's a one-time thing.
Yeah.
So, date the rate, marry the home.
That's right.
So key. Because
so key.
I want to touch on this again because it's so crucial to people to understand. Like, if you get into a home that you really love, and what happens? Okay, the interest rate goes down. You refi, you get the lower interest rate. The interest rate goes up. Well, guess where you're locked in at?
You're already locked in. That's right.
Interest rates go down, your price goes up.
You're in a 30-year fixed mortgage. You're good to go.
I feel like it's a good situation either way. If you can just get the home you want.
That's exactly.
And then you go through all the steps, pre-qual, the loan, all that good stuff. Let's hear. Who will be the title and escrow agency or attorney?
So that's up to negotiations. That's up to negotiations with you guys.
Yeah.
And you explain that.
Yeah, actually, we do have a title company we work with that is amazing. So I don't know what's in here. Like I said, I Googled these. I haven't even really fully read them all.
I saw that you missed this one.
Oh, do you charge for an interest rate lock?
Okay, so that's a great question. So the rate locks are generally, we do 30-day rate locks. As you increase the time, the rate lock costs more, but you're not going to see it as a consumer. It's built into the cost of the rate. However, if you do a 6-month to a 1-year rate lock, yes, we charge 1% upfront to lock that rate. But in markets like this, we would have used that product in 2020, end of 2020, 2021, when we know inflation was going up and mortgage rates follow inflation. So we knew that rates were going to continue to rise. So we would lock, if somebody was doing a new build and they estimated to take 12 months, we would do a 1-year rate lock to protect that rate, and it worked out wonderfully. But we'll give you the advice on what you should do, but we're not trying to
so
put
that's more
anybody
of a case by case scenario, because if you're like our new build friend that's buying in July that we're you wouldn't recommend it for them.
No, I wouldn't do it.
Yeah,
I wouldn't do it.
That's good, and you're honest. I like that.
Yeah.
It's key, you know, not taking people's money for fun.
No, and there's no way I'd want to take the money. We get paid the same no matter what, and I'm not trying to charge.
One of the things I do love about you guys is you are for the long run, because I send people to you that are 2-3 years from buying a home.
Yeah.
You guys are still
checking
it. Yeah, working on it and building that relationship, and that's what things we like. So I have one last question here, and then I think we'll end it. And if we get any views at all,
let's see. Hopefully,
they
might not like our faces, you know.
Yeah, they might not. You might get all of 3 views. You know, you never know with these videos. But last one is, how do you communicate with your clients?
So very big for us. We try to stay on track all the time, but we communicate through text, email, phone calls. We generally try to do everything through phone call, just so you can get the psychology of the conversation coming through. But then we always follow up with emails, just so everything's on paper on what we're talking to you with. Meaning, what's your monthly payment? What are you pre-qualified for? What am I expecting for closing? All that good stuff. So that it's on paper, so that we can go back and look at it like, hey, we did talk about this. I want you to know that we're not working anything in here. Go back to that original email so that you can see that it's all there.
Perfect.
Yeah.
Yeah, I like it. So I think I got my top 10 ones answered so far.
Awesome.
I thought this was great. I like being able to answer questions.
I love this.
Because again, I just had no clue what to do. And I feel like there's a lot of people in there. And the biggest thing you run into, people don't want to call. No. They feel like they're going to owe money or it's cost something to just talk to us, and it doesn't. I'm a real estate agent. He's a lender. Paul, Justin, we're happy to talk to anybody, anytime, answer any questions. We'll put our links into the bio of this video so you guys can hunt us down and see what we do. And please comment, ask questions. We'd love to make another video and just really help anyone.
Throw some comments in there about what videos you want to see.
That'd be great. All right. I think I'm good, man.
Yeah, man.
Appreciate it.
Good stuff.
Thanks, guys.
Thank you.